Good day, everybody. It's wonderful to have you back with us at Hospitality Talks. I'm your host, Abid Butt. Our guest today is a true titan of the hospitality real estate sector, bringing over 40 years of specialized frontline experience to the table. As the co founder, president, and CEO of LW Hospitality Advisors, he leads one of the industry's premier firms, trusted globally for its data driven valuation, advisory, and transactional expertise. Widely recognized as one of the most authoritative and forward looking voices on lodging trends and macroeconomics, he's here to break down where the market is headed next. Please welcome co founder, president, and CEO of LWHA, Daniel Lesser. Hi, Dan. Thanks for taking the time to join Hospitality Talks today.
Great to be with you again. Thank you for inviting me.
Absolutely. There is lots to talk about. But before we get into the industry discussion, let's walk down the memory lane, if I may. Tell us a bit about your journey. How did you end up in this industry? Why did you elect the advisory side of things? So give us a bit of your own background, please.
Absolutely. And thank you for asking. So I grew up in New York City. I was born in New York City. Grew up in Forest Hills, New York, which is in Queens. Was never tremendously academically oriented. However, I always had a very strong entrepreneurial streak, and I knew how to make money at a fairly young age. I came across a book while I was in high school called Your Career in Hotels and Motels. You had a lot of motels back then. It was written by a gentleman by the name of Herbert Witzke. This is in the 1970s. And the middle of the book had about 10 pages double-sided of black and white photos of hotels all around the world. I read this book. I saw the pictures. I thought it was incredibly exciting, and I decided I wanted to get into the hotel business. So I was in the middle of high school. I want to say 10th grade, and I became aware of the École Hotelière in Lausanne, Switzerland, which is a well-known hotel school in Europe. And I applied to the École Hotelière, and they accepted me. The issue was that, well, two things. They had a 4-year waiting list for those foreigners who were accepted. If you were Swiss, you didn't have to wait. But if you were a foreigner and you got accepted, it was 4 years in the future. And in order to equal a Swiss high school education, an American needed high school here plus 2 years of university to equal a Swiss high school education. So I applied. I was accepted 4 years in the future. It worked out perfectly from a time perspective because I finished my 2 years of high school. And then I went to Baruch College, which is part of the City University of New York system. That's where I went for 2 years to fulfill the entire 4 years. Little side story, when I graduated high school, I applied to Cornell University's hotel school. Like I told you earlier, I was not that academically inclined. They didn't accept me, and I was like, okay, no problem. Did my 2 years. Before I left for Switzerland, I reapplied to Cornell again, and they didn't accept me. And I was like, okay, I'm off to the École Hotelière. And at the time, there was a little bit of a rivalry between the two schools, although Cornell was always known as more of a sort of a academic business type of program, and the École Hotelière was more of a vocational. If you want to be a finely trained Swiss hotel manager, that's where you went. So they were very intrigued when I had shared that I was off to Switzerland. Make a long story short, I was told, okay, well, go there. And if you want to reapply, I sort of got a wink, wink. You think you might get in. And so, sure enough, it was the best thing that ever happened to me that they turned me down twice because I went to Switzerland for a year. I did what was called the cours de cuisine. I learned how to cook. I make better hard-boiled eggs than anybody you ever met. I did my cours de cuisine over there, and I reapplied to Cornell for a third time, and miraculously I got in. So I ended up transferring to Cornell, which is ultimately where I graduated from in May of 1979. I worked for Hilton Hotels Corporation for a number of years at the New York Hilton Hotel, 2,100 room convention hotel in Midtown Manhattan. What an amazing place to learn the hotel business. I spent time in every sub department within the front office, every sub department within food and beverage. And then ultimately, I was promoted up to the catering sales office. And after about 2 years, I came to the realization that I love the hotel business, but I didn't want to make a career in hotel operations. And so I was fortunate. This is back in 1981, I think it was. I had hooked up with Steve Rushmore, who had just founded, back then it was Hospitality Valuation Services. Today it's known as HVS. And I was his first hire when he founded HVS. And I remember when Steve interviewed me, he had told me that he was going to be buying a building in a week, and he planned on hiring 10 folks and building a big practice. He had just written a textbook called The Valuation of Hotels and again Motels, and it became the definitive treatise for valuing hotels. It was an interesting time talking about 1981 because that's when the Apple computers first came out and spreadsheets first came out. And that's when folks were starting to do discounted cash flow, not just on hotels, but just discounted cash flow. And so he really kind of hit the market perfectly. He wrote this book, Discounted Cash Flow came up, and it really became the authoritative document for reflection on how investors are valuing hotels. I spent 13 years with him at HVS, helping him build out that practice. Then I joined Cushman and Wakefield. I spent 11 years at Cushman and Wakefield. I started up a hotel consulting, valuation, feasibility practice there. Built it from nothing into a $12, $15 million revenue business. Then I did it a third time in my career at CB Richard Ellis. I spent 5 years there and again started up a hotel consulting valuation feasibility practice. Spent 5 years there, and then in 2011, the very beginning of 2011, launched LW Hospitality Advisors. That's 15 and a half years ago now. It was me and my partner, no business plan, nothing. We just went out and did it. And today we are a professional services provider with various silos of business, focused exclusively on the hospitality sector. We have about 43 professionals. We're headquartered in New York. We have boots on the ground all over the country. That is a kind of a summary of my career.
Well, an amazing journey, Dan. This is fantastic. If you look back to the days of working in that super tanker of a hotel, is there a department, operating department in hotels that is undervalued even today?
That's a great question. Um, Undervalued. I'd have to think about that one. What I would tell you, though, is I vividly recall working in all these sub departments, like I said, within food and beverage and front office, and like you said, a super tanker hotel, and dealing with concepts and theories that I had learned in school. But while I was at school, I had trouble relating to them. When I was in industry, it was like, oh, yeah, I remember that. And I used to pull out my textbooks and reread everything. So if I had to do it all over again, I wish I had more hotel operational experience, a la at the Hilton, before going to hotel school. I think it would have meant a lot more to me.
Fair
As
enough.
far as underappreciated, I guess it wouldn't matter. It would mean from what it would determine from what perspective, right? From the guest perspective, from the operator's perspective. Listen, back of the house folks, they're back of the house, right? So nobody really kind of sees them or hears from them. So my gut reaction is to sort of point to them as opposed to folks that are, front facing people, day in and day out.
Fair enough. So that initial experience that grounded you in this industry, how has that translated in when you are dealing with multi-million dollar assets and guiding the investors? Do you still reach back to the toolkit that you gained at the initial days of your career?
No question. It's a great question, and no question about it. Um, Listen, there are many folks in the lodging sector, operationally, on the investment side, what have you, that got into the business with no prior either hotel educational background or hotel operational experience that have done extremely well. It's not a must to have gone to hotel school and or work in the hotel industry. For me, it's been extremely beneficial, and I feel like it does give me an edge, all things being equal, right? Particularly if I'm testifying in court as an expert witness, all things being equal, I have deep hotel operational experience, and maybe the opposing expert has valued a lot of hotels but never worked at a hotel. There's something to be said about actually getting your hands dirty and learning the hotel business. And so the long-winded answer to your question is yes, I definitely reach back to it, but I do want to emphasize that it's not a requirement. Lots of folks have done very well getting into the space without the educational and or operational background.
Look, it wasn't all that long ago that this industry got recognized as a career. Other than that, it was primarily vocational education. You came up through internships and apprenticeships. For the longest time, that's how Europe has developed some of their most successful industry professionals. But I think with the competitiveness that is out there today, and the business that is changing faster than you can possibly imagine, it does help to have both the education and the hands-on experience. Let's move on to more of today's environment, Dan. If you look at the headlines as of late, it'll be a pause for concern. The economy conversations and consumer sentiments being possibly at an all time low. Can you share some of the things that are in the current environment that might be helping the industry and others that might be hurting the industry?
Absolutely. You do bring up a very valid point that consumer confidence, generally speaking, is at an all-time low. But if you think about it, the stock market is at an all-time high, right? So that's a real dichotomy. I hesitate to use the term, but we hear it all the time about the K-shaped economy, and that really goes to the heart of what you've asked. The wealthy are getting wealthier, and the middle class and below are having a challenge. And so the consumer confidence index embraces, all economic spheres. We all know that luxury is doing phenomenally well at one end of the spectrum, right? And at the other end of the spectrum, the economy is not doing that well. So it's a bifurcated market. There's no question about that. And listen, at the end of the day, if you think about hotels, they lease up guest rooms every single night. With technology being what it is, pricing for room rates changes by the second. And because of that phenomenon, the hotel industry is very sensitive to outside forces. And so if you think back to January 1st, 2020, and compare and contrast to April 1st, 2020, we were already into COVID, right? The world looked very different. No different than 9/11, right? On September 10th, the world looked very different than on September 12th. And so there's a lot of volatility within the sector. There's no question about that. When you're dealing with a full service hotels, resorts, larger type properties, you end up having revenues from putting heads in beds, but then also revenues from food, beverage, recreational amenities, retail, what have you. And then if you think about the expense departments associated with all those varied income streams, the hotel business is a very complicated business that is constantly changing. And your points are well taken that confidence is quite low, consumer confidence. The economy, I mean, it depends on who you ask, what's happening with the economy. But generally speaking, if you think about what's going on in the hotel industry, it's in pretty good shape, generally speaking, right? Some markets are winners, some markets are losers. Even within markets, sub-markets are very important. But it is quite remarkable. The industry is resilient. It's another term that gets used all the time, but it's true. It's very resilient and just seems to. I mean, if I look back on my lifetime at all the calamities, whether it be COVID, 9/11, the Gulf War. I mean, it just goes. The stock market crash in '87, right? There've been many, many of these, oh my God, the world's coming to an end moments, which is not good for the hotel business for a period of time. But then it always comes back bigger and better. I don't know, it happens every time.
Well, that's a wonderful thing about the industry. Other than that, travel and tourism, generally speaking, is the largest employer, but the industry itself continues to be buoyant and it bounces back. Thankfully, it does. Otherwise, we'll all be in trouble for those of us who have lived this industry all this time. Continuing on that conversation, Dan, the second half of 2025, RevPAR declines were rather pronounced. Coming into 26, there was a bit of a turnaround. What does the first half stats look like from RevPAR, but more importantly, from EBITDA margin perspective?
RevPAR is definitely up for the most part first half of this year. There's no question about that. Um, Actually, it's interesting your point about the end of last year. That was the first time that RevPAR, revenue per available room, declined in a non-recessionary environment. That never happened before. But it's rebounded quite nicely so far this year. So RevPAR is definitely back up. Profits are still a challenge. Now, the industry is making money. There's no question about it. But there is a phenomenon whereby, in many situations, operating expenses are increasing faster than revenues, and that's not a durable business model. Um, so the industry is figuring out what to do to lessen the impact of, rising property taxes, rising insurance premiums, labor. It's a challenge to find labor, and then when you do, the cost of labor. And if you're dealing with a unionized property, the work rules associated with the union contract. So New York is sort of a great example of what we're talking about right now. Revenues are strong, but bringing it down to the bottom line is challenged.
Challenge.
They're making money, but again, if your revenues are moving up faster than your expenses, that can't last too long.
So look, there is lots to be unpacked with each of these conversations. I'm going to stick to something that is very recent, particularly in New York, and that's the citywide agreement. Which appears to be guaranteeing some of the highest wage increases in light of the expenses that are already making this industry hard to live with. Labor expenses high. You talked about property taxes, utilities. Some of these things are beyond the control of a hotel operator. What recommendations would you have, Dan, for asset managers, operators, and owners? How do they navigate this tumultuous time?
Actually, I think it's pretty simple, right? If your revenues are not sufficient to cover expenses, well, then you need to raise your revenues. And how do you go about doing that? If you can increase demand, that's terrific, right? But raising prices, which is what, think about the airlines do that. Everybody does that, right? New York is a great example. The room rates in New York are already very, very high, but there's a supply and demand issue, right? In New York, occupancies are running mid 80s on an annual basis. During peak periods, you cannot get a room in New York. As a matter of fact, recently I wanted to stay in the city for one night. I went on one of the hotel chain websites and found a select service hotel in a mid-block location in Midtown, nothing fancy at all, for $1,200 for the night. Wow. And that was clearly driven by supply and demand. Your question is interesting to me as well, because yes, there are challenges, but for those who know and understand the hotel business and are focused on it, there's a lot of money out there that's being deployed, a lot of smart money too. So New York, for example, GenCom, within the past 18 months, has purchased 3 significant assets in Manhattan: the Ritz-Carlton Central Park South, the Thompson on 57th Street, and the Intercontinental on 8th Avenue. These are big assets. GenCom, they're smart people, smart investors. They're making big bet in New York. To me, that says a whole lot. Now, obviously, they've acquired assets at basis levels below replacement cost, right? San Francisco is another example. Blackstone recently bought the Four Seasons in San Francisco for pennies on the dollar,
Wow.
right? So the smart, sophisticated folks who know and understand the industry, they're able to figure out how you buy low and sell high, which is not a complicated phenomenon.
So, to that point, though, Dan, is it becoming more of a real estate play than the hotel play? And the discounts that you have talked about, is it because the owners today are just giving up and they willing to exit at pretty much at any cost. And what does that tell us about the industry?
There's a fair amount of capital distress, not necessarily operational distress, but capital distress because of debt that was originated 5, 7+ years ago when the cost of capital was nil, right? Or debt, I should say, was nil. Today, that's not the case. Today, debt compared to not that long ago is expensive, but everything's relative in life because if you look at where interest rates are today and compare and contrast over a long-term, say 40-year period, interest rates today are not that high on a long-term look back. But during the recent past, they are definitely elevated. So if you think about it, folks that originated debt at tremendously low returns of a rate of returns and debt maturities are coming up, they're going into a market now where the cost of capital to refinance is much more expensive. Layer on top of that, no shortage of hotels in America that need a renovation, still left over from COVID, right? The brands played very nicely during COVID. Those days are long over, and there are a lot of hotels that need capital. So you have sponsors out there where the operations are fine, but they're facing challenges vis-a-vis servicing refinance debt, and they need capital to renovate property. So that is causing capital distress, not necessarily operational stress. On the other side, I think I mentioned earlier, there's a tremendous amount of capital in the world chasing yield. And a lot of that capital is focused on the United States of America. And if you drill down further, commercial real estate and hotels, when you could keep going below that. You know, I've been doing what I do for quite some time. I don't remember ever a period of time where hotels were perceived as a more desirable investment asset class compared with office buildings. But that has been the case for quite some time now. And so, you know, hotels have really evolved into an institutional investment class. Whereas, as you alluded to earlier, you know, not too distant past, it was sort of okay. It's a hotel. It's not part of the, you know, the main food group of industrial, retail, office.
Yeah.
Today it is, and so there are challenges today. There's no question about it. But you know, somebody else's challenge becomes somebody else's opportunity, and that's
Absolutely.
really so. You know, there are deals that have come to market and are coming to market that are perceived as being quote unquote distressed, but it's a capital issue, and it might be a distressed situation. However, if there's a good story to be told about the investment opportunity, there's so much money out there that if there's a good story, ultimately the pricing is going to get bid up. And so you have distressed opportunities that don't necessarily translate to distressed pricing.
Fair enough. You know, I'm going to date myself way, 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 way back when this industry was getting money poured into it because larger companies could take the tax write off because it was a money losing business. The tax laws facilitated industry's growth. Well, those times are long gone. We're dealing with different issues now. Look, earlier in the conversation, you did bring up the polarization of chain scales, where luxury is doing amazingly well, and some of the other segments are struggling. Talk a little bit about, is it purely a reflection of the economy consumer showing distress? And is that why it's causing it? How does the market navigate with where luxury is thriving? And possibly for the first time, because in mature markets, luxury formula was very difficult up until recently.
The world is constantly changing, as we know, right? And today, the phenomenon is exactly what you described. I think it's safe to say that within the luxury segment of the industry, renovations happen more often and are more of a focus than they are at the opposite end of the spectrum, economy, and a couple of tiers above that. And so I think part of the challenge is, and alluded to this earlier, there's no shortage of hotels in this country that need renovation. I will tell you, when I travel and I go on major websites, whether it be Marriott, Hilton, Hyatt, I mean, I'm not going to pick one, but I actually made a reservation. I'm going to Miami the week after next and need to stay in the Brickell area. And I was shocked. This one brand family had, I don't know, 20 hotels within the submarket, and they all had reviews that averaged less than 4. Now remember, 5 and this is on the hotel website.
Oh,
They
wow.
averaged less than 4. And then when you go in and you look at some of the comments, a lot of comments about they need renovation, right? And so I think that's really been sort of part of the challenge, that the money hasn't been there to do the renovation for the lower end hotels. Whereas the upper end hotels, they're doing phenomenally well. And so they're getting renovated. And obviously the demand is strong for those assets as well. Nothing's forever. At the right basis, it's a great time to get into the lodging space, irrespective of which segment it is. I also happen to think, I like to think in a contrarian manner. And so if economy is suffering now, probably a good time to get in there and buy that, although they're not sexy assets. But if you can make money, and that's what your objective is, there could be some tremendous opportunities in that part of the space.
So earlier, we also talked about the supply side of it being stable. There is not a massive influx of supply coming in. So that gives the industry a little bit of a tailwind. Now, the headwinds would be the capital structures in whether it's CMBS or other debt that is reaching maturity, and what do owners do for that? How do you anticipate ownerships that have these issues that they're dealing with, whether it's PIP, whether it's refinancing? How do they work through that?
They either make a decision that they're going to deal with those challenges, or they're going to throw their hands up and say, I'm done. Get rid of this thing. It is a challenge. There's no question about it. Listen, you can refinance, you can recapitalize with equity, sell. There are options, though it really depends on the specific asset and the specific locale that it's situated in.
But by the sounds of it, Dan, you appear to be pretty optimistic with the state of capital markets. Is both debt and equity relatively readily available? Is it more that people need more of a debt? Talk a bit about the cap stack, if you would.
There's an enormous amount of both debt and equity that's chasing yield and is earmarked for the lodging sector within the United States. Tremendous amount. There's no shortage of debt or equity. Now, we did talk a little bit about construction, and supply is very muted. There's this notion that there's no construction money out there. There's construction money out there, but a project needs to make financial sense in order to tie up that money. I wouldn't say there's an enormous amount of construction money, but for the right projects, it's out there. Refinancing money, no shortage of it. Acquisition money, I mean, there's just a ton of money out there, debt and equity. And again, they're chasing yield. Sit on cash, you're losing money.
Fair enough. You got to put the money to work. In throughout that dreadful time that all of us lived through called the pandemic, people were expecting cap rates to be a lot more favorable, but both lenders and brands and owners were kicking the can down the street, just being helpful to each other because nobody knew how to work through that time period. That is behind us. Industry has bounced back very well. Now is the time for where the renovation is required. The maturities are coming up. So there are lots and lots and lots of challenges that people are up against. This price difference that you mentioned, where deals are there, you can buy low, you can buy below replacement cost. And if the market is at that level, would it really make sense to build a ground up development?
Well, it depends where. I mean, there is development going on, but in downtown urban cores, it's pretty tough to get it done. It's pretty tough for it to pencil. I mean, New York, for example, there's still some development going on that's left over from pre special permit. But once the special permit came into play, we're not going to see a major new hotel in New York. Once this current phase is finished, Gary Barnett's building a big property in Times Square. But within the next year or two, there's going to be negligible amount of new supply, and that's probably going to endure for a long, long time because it doesn't make economic sense. Construction for, new facilities, if there are no economic enhancements, it's not that easy to get. Again, I said it is available for the right projects, but if you do get economic enhancements, that could change the equation. So yeah, long term, the fact that supply is muted, that's a really good thing for existing owners and operators.
The industry has debated over years about under demolished hotels because there are some hotels that are might be functionally obsolete. Have you seen changes in that front, or are we continuing to pour money into it to keep them alive and make money out of them?
So during the pandemic and since the end of the pandemic, we've seen many older hotels be taken offline, either converted to alternative uses, either torn down and a new asset class being built in its place, or being torn down and a new hotel being built, or a mixed use complex. We've seen during the pandemic and since, particularly on the West Coast, quite a number of select serve and limited service hotels be purchased by municipalities to be converted to homeless housing, right? Tunnel to Towers has been buying hotels and converting them into housing for veterans. So it is interesting concept because in our industry, everybody talks about new supply, whereas in all the other real estate asset classes, they talk about net new supply. For some reason, in the hospitality business, we only talk about new supply because you bring up a very valid point. There are lots and lots of hotels in America that have reached the end of their economic life, and yeah, we're seeing them getting taken offline. I mean, we've been talking about New York. The Roosevelt, I don't think is opening up as a hotel again. Now, I did say that 5, 6 years ago, and it did reopen as a homeless shelter. But the Pennsylvania Hotel in Manhattan. I mean, there have been some significant deletions of supply in New York and other markets, and it's going to be a long time before those get backfilled. That's a beautiful thing for existing owners and operators.
No doubt about it, because if the new supply is stable and that not massive chunks of new supplies coming in, and also some of the functionally obsolete or really old stock that gets taken out, I think owners have everything to gain as a result of that, depending on the market that you're in, of course. But also, I think some of these functionally obsolete hotels, they don't deliver what the consumer expects, and it gives the industry a bit of a bad rap. So I think it's a good thing if there are alternative uses that are being talked about for these buildings or the land, as the case might be.
It's an interesting topic because I just the other day posted on LinkedIn about the economic life of hotels and how it seems to be shortening as time goes on. And I cite 3 recent examples of hotels that were torn down to make way for new projects that might include hotels. The Mandarin Oriental in Miami was recently imploded. The 25-year-old hotel, not very old at all. The Sheraton Arlington, Texas, which was just torn down, and Lowe's is going to be building a massive convention hotel there. It's an interesting phenomenon, and some of these hotels have only been around. Oh, the Sheraton in Mahwah, New Jersey, another asset that was like 35 years old. So these are fairly modern.
That's
They're
correct.
not, perfectly laid out from a functional perspective, but a 25, 35-year-old hotel, it's a little bit surprising to me, at least, that these things are coming down and getting replaced.
Well, to be honest, I wouldn't have thought that 25 to 30 years would have been an old stock, but maybe the market has shifted so dramatically that the highest and best use turns out to be something totally different. Let's talk about the new development a little bit. A lot of the new development incorporates residential components somewhere along the line, particularly markets like Miami they have thrived on the residential market, and so some of the hotel development that has come together that has a residential component in it. Talk a little bit about evaluations, and when you are counseling investors, how does that work? What challenges does it present? And are lenders favoring that model over just a pure hotel asset?
Great question. The resi component comes into play with full service and above, right? So, and generally luxury, resort type properties as well. Listen, at the end of the day, the economic feasibility to pencil out for a new resort and or luxury hotel in an urban environment, there's no way it can pencil out without the resi component. And so almost everything that you're seeing that is being developed that similar to what we're describing has to have a residential component to it. Yes, there are challenges. There's no question about it. Um, you have to figure out obviously the optimal brand, not just for the hotel, but for the residences. Negotiating the economics with the brand, if you will, and also the service offerings of the brand. It definitely is a complicated issue, but it's one that without residential, it's not going to work.
Fair enough. Dan, travel globally continues to grow. We talked about how resilient this business is, and thankfully that is the case. Closer to home, in the domestic U.S. market, the industry was anxiously waiting for the World Cup event. It's a global event. We are meant to have massive amounts of international travelers coming in. Has it really materialized the way we were all anticipating? If there are other big events that have been planned, how can the industry do a better job of capitalizing on these events and not possibly go crazy charging people $3,000 for a courtyard?
Well, I don't know why they would. If you can charge, why wouldn't you? And you can get it, why wouldn't you do it? Listen, the World Cup. I will tell you that Lodging Analytics Research and Consulting (LARC) from the very beginning was saying this was going to be a average rate opportunity. It really was not going to affect occupancy all that much. And candidly, that's what we're starting to see now. Supply and demand, right? If you are coming to wherever and you paid God knows how much for tickets, transportation. I understand if you're in Manhattan, you want to go to the Meadowlands, it's like $100 round trip to take the train, something to that effect. Supply and demand. Hotels are going to charge what they need to charge, and there are people that are going to pay that kind of money. And so this really is a rate opportunity. There are other types of events that will be coming up: the LA Olympics, the Salt Lake City Olympics. These are one-time phenomenons that definitely fill rooms. There's no question about it, and provide an opportunity to raise rates. And but they're one-time opportunities, and I always scratch my head when you hear about Olympics. And then all these buildings getting developed for a one-time event. Okay, what are you going to do with them afterwards?
Yeah.
So listen, where the United States right now is riding pretty high in terms of all the international traffic that's coming in, albeit being somewhat hindered by the political rhetoric and the visa challenges, and we probably could have more coming in if those issues didn't exist, but they do exist. I think it's a great opportunity for America to shine. I think it is shining. And you know what? Put all the rhetoric aside for a second. Everybody wants to be in the United States. Everybody wants to be here. Everybody wants to invest here. And I don't think that's going away anytime soon.
Well,
And
I
one
completely.
more thing I just wanted to say too about travel and internationally and just travel in general. I believe that COVID really brought to the fore the notion that life can be short and enjoy it while you're here because you never know, right? Talk about uncertainty. That's one of my favorite topics. Uncertainty. I don't remember when the world was ever certain, so I don't know why it's a big deal now. But in any event, the notion of living today while you're here, the notion of human connectivity, right? During COVID, we've been doing this all the time, and this is great, right? But it's not like me and you sitting face to face, looking at each other in the eyes, right? And so that human connectivity became sort of more of a focus as well as a result of COVID. And the whole notion of experiences, right? Before COVID, we really didn't hear that much about experiential this, experiential that. But it's a phenomenon that is here. And I don't think it's going away anytime soon. And I think all of this is tied again, back to COVID and how human beings sort of evolved after the fact. And it's a wonderful thing for the for the hotel industry. People love to travel. People like to explore. They like to experience. They like human connectivity. It's a great thing for the travel industry, and long term, it's a great thing for the hotel industry.
Absolutely. And I couldn't agree with you more. We talk about uncertainty, but we are 100% certain that there will be uncertainty. So it is what it is. We just got to hedge our bets and be prepared to the best possible way we can. Then no conversation will be complete unless we talked about technology with the AI and all the conversations that are occurring about technology, whether it's from a revenue point of view or is it taking out some of the mundane things and cost saving point of view. Give us your thoughts on where the best gains are. Is it really working or is it still premature?
Too early to tell. It's premature. Listen, I don't think there's any question that AI advancement in technology is going to have a dramatic effect on the world, on human beings, on all industries. How it's going to ultimately shake out with the lodging industry, I mean, my guess is as good as anybody else's guess. And so I think as time goes on, we shall see. What I will throw out there is that the lodging industry, for some reason, has always been behind the curve in terms of embracing technology, never mind developing it themselves. And I like to look at the online travel agents as like the poster child of that phenomenon, right? They really came into the fore during the great financial crisis, 2008, 9. They'd been around for a couple of years before then, but they really came to the surface when, during the great financial crisis, the hotel demand for hotel rooms went way down, and the lodging industry looked at OTAs and said, "Oh my gosh, this is the greatest thing since Swiss cheese," and embraced it wholeheartedly, only to figure out as we came out of the great financial crisis that, wait a second, what did we just do here? We lost control of our most precious commodity, the guest, and so there's been that, you know, struggle for the hotel companies to sort of get that control back. They've done a pretty good job at it. But you know what? That's all changing now with AI and the way people are searching for itineraries, for experiences, what have you. And so I don't know what the answer is going to be. It'll be interesting to see as well whether, that whole talk about AI eliminating the need for human brain capital. I read somewhere the other day that Jeff Bezos said that he believes that the advancement of technology and AI is going to require more people who are going to have to work. Why? Because technology is going to allow the development and the flourishment of new ideas to really just explode, and so people are going to be needed to help figure that out with AI. Right? We've all heard that it's those who don't know how to embrace and or use AI that are going to fall behind, but those who do know how to use it and keep up with it should be okay. Great question. I don't know the answer to it. Labor, it could be a tremendous opportunity with robotics and things like that on the one hand. On the other hand, in union markets, it's not very easy to just say, okay, we don't need you anymore. We're putting a robot in here. But I think as time goes on, we're going to see more and more robotics coming into hotels. And the beauty about robotics is they never go to sleep. They don't answer back. They don't go on strike. I mean, there's all sorts of positives, but it'll be, I think, a little while before we see complete embracement of that.
I think that brings us full circle then. Is the industry and educational institutes are we doing enough to reskill and upskill and produce the future leaders of this industry that are comfortable with the technology and that can uh, 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 go through this next wave of change that the industry is anticipating?
I think absolutely yes. The hotel industry, the lodging industry is, I don't know, I've been doing this a long time and I still pinch myself every day about how fortunate I feel to be in the lodging sector. It's an exciting industry. It's dynamic. It's forever changing. Um, there's just always so much going on. And so it does attract a lot of bright young folks. And bright young folks today know that they better be technically savvy and they better stay up with it. Otherwise, they're not going to be able to keep up. I think, older folks like you and me, right, a little bit more of a challenge with keeping up with technology. I make a point of doing it. I would imagine you do as well. But it comes a lot easier to younger folks, right? Uh, Long-winded answer. I think between the dynamic and exciting aspects of hotels. I mean, let's face it, hotels are sexy investments, right? Investing in muffler shops, you may make a lot of money, or car washes, right? Nothing wrong with them. Make a lot of money, but they're not sexy, right? Hotels are sexy, and I think that young people want to get into the lodging sector. They don't maybe want to get into operations, but they want to get into the investment side, into the asset management side. I mean, there's so many different things you can do, and so I think the industry is doing a really good job to keep young people interested in it, and I don't see that going away.
Fantastic, Dan. Thank you so much for that. We really do need to continue to attract the younger audience into this business because when the gig economy came in, we lost some of the people there. During pandemic, yet another wave of people went away. Generally speaking, and I know I'm generalizing, I understand that a lot of the hotel program enrollments are substantially down. So industry needs to do a bit more advocacy work with the younger audience to attract them to this industry. And I couldn't agree with you more. I consider myself very, very, very fortunate to have had the journey that I've had working around the globe. It's just an amazing industry. We're approaching the end, and just a couple of quick fire things. If you had a couple of $100 million, luxury or extended stay, where would you put your money?
Depends on the market. Really depends on the market. I'm a big fan, and I mentioned it earlier. I'm a big fan of San Francisco. So I've been saying this for a long time as well. I stopped saying it on LinkedIn after Blackstone bought the Four Seasons, because to me then it was a proven situation. But I like contrarian thinking, right? So when everybody was poo-pooing San Francisco, that was the time to get in. I said earlier, right? A lot of poo-pooing vis-a-vis economy properties, right? There's probably some good opportunities there at the right basis. So it
Fair enough.
really depends on the asset and the submarket it's located in.
Okay. Just quick, short answers. New York or Florida?
For what?
Hotel investments, where would you put your money?
I like New York at the right basis.
Okay. If you look into the future, let's take the next 4 or 5 years, would you anticipate more humans making the reservations and taking care of people, or more technology?
Technology, absolutely. Technology.
That is fantastic, Dan. Thank you so much for taking the time to join us. I'm sure our viewers will get a lot out of it. And I look forward to having you back before too long.
Thank you. Thank you so much. It's great to be with you again.
Thanks again.